We were in negotiations.
Investing in real estate.
They're winning, they're making money.
What's up, everyone? Welcome to the Real Estate Educators Podcast, where we provide the education you can build on. I am your host, Kevin Amolsch. This podcast is unlike anything we've ever done, anything I've ever seen, because we not only help real estate investors, but we dig into the content creation behind that. We want to help real estate investors and real estate influencers build their wealth, make more money. If you like what you hear, even if you don't, do me a favor. I'm trying to grow the channel or trying to grow the podcast. Leave me a 5-star review and share this with a friend. And speaking of friends, I have one with us today. Super excited, Matt, to have you on the episode today. You and I have gotten to know each other over the years at some of these real estate education events and the networking and the networking parties after the networking. So it's been a real pleasure getting to know you, and I'm excited to get to know you a little bit more on the show. So you've been doing this since 2015, and you have what, 40 rental units and hundreds. Let me see here. You have 244 beds at an assisted living facility, or probably several facilities. So excited to get to know about all that. But why don't you tell us, Matt, who are you? Tell us a little bit about you.
Absolutely. Yes. Like you said, I started in 2015. I thought that I had to start with small stuff. So I bought a triplex. I lived in one unit and rented out the other two, saved up money for my job to be able to get the down payment on that with an FHA loan. And then, saved up more money. And eventually I was able to buy another triplex, but it was just going so slowly. I thought I traded in these triplexes for a 10plex and just over time to be able to get to like a large apartment complex. But then I learned about real estate syndication in 2019, and that just blew my mind because I thought, man, this saves all my problems for me. I no longer have to wait to save up enough money for a down payment on a place because I'm using other people's money, and I can just jump into the bigger stuff. I don't have to scale up over time. So that's what I started doing, started learning from that, started investing in those, and then now starting to take a more active role as well in real estate syndication with large multifamily and as well as senior assisted living.
Okay, so you multifamily and the assisted living. So I want to get into that a little bit here too. But let's start with that first triplex. So you were interested in real estate, obviously, as an investment when you bought that triplex. So how did you even get interested in the business to start with?
Oh, well, I mean, I read Rich Dad, Poor Dad back in maybe 2003, but then it took me 12 years before I bought my first property. I did some network marketing and thought that would be the way to get some cash to be able to buy a real estate property, but that didn't work out so well. But learned a lot anyway, and so eventually I was like, you know what the heck am I doing? I'm wasting my life. I need to do what my original plan was back then, and started looking at some places. And 2015 turns out great time to buy real estate. Like you can buy anything, and it held. If you hold on to it, then it's going to do well. And that turned out to be a cash cow. Made a lot of money from that. Eventually went full cycle on it. And I have a background in group home management, and I kind of adapted that to managing the triplexes. They were sort of easier versions of managing a group home. Some regulations, but far fewer. Still having to manage the residents and whatnot, and that's always fun at times. But with real estate syndication now, going with the bigger stuff, I like it better because there's a layer between me and the residents. They don't even know I'm one of the owners. So I'm not getting these 3 a.m. calls of like, oh, there's a homeless person sleeping in the hallway or whatever, which I definitely got before.
I'm sure you have.
Yeah, exactly. Anyway, so I prefer that. And then I wanted to teach other people as well about how to get to that point, because again, you don't have to scale up slowly over time. You can just decide what you want to do from the forefront and then just jump right into it.
So that triplex, that's such a great way to start, right?
Mm-hmm.
We call it house hacking now. That's the term that everyone's using. It's where you rent out a portion of the property you own, you live in a portion. So I've never done that. Well, I guess I did. I had roommates, if that counts, but they were like buddies,
Mm-hmm.
Someone I would hang out with. You did it where these aren't people you knew. I mean, these were like legit tenants. So did you ever get like them knocking on your door? Like, I need help with, I locked myself out, or any crazy stories like that?
Oh, absolutely. I mean, because they know when I'm home, and so they can just knock on my door with whatever kind of questions. But whether it's mice or yeah, a homeless person living in the closet in the entryway, yeah, that was interesting. Um, or whatever kind of problems. Like the triplex was just in the path of the riots in Minneapolis when those happened in 2020. So that was definitely a challenge at that point with the neighborhood kind of on fire, literally. But luckily, nothing happened to my triplex. But yeah, so managing the tenants, actually over time, because I owned it for a little over 5 years, and so there were a couple of people I knew that I had as tenants for a bit, but most of the tenants I didn't know.
Yeah. Okay. Yeah. So for the listeners, you're out in Minnesota, in Minneapolis. So that was the riots that we experienced. That was all national news, of course, but just so everyone knows that you're in Minneapolis. And you talked about regulation also. That's because you're in Minneapolis also. There's more regulation in Minnesota than most parts of the country. But okay, so you read Rich Dad Poor Dad. You got excited about real estate. You got excited about passive income, and you want to help your family. You want to do the things you want to do. You just got back from a pretty sweet European trip, it sounds like, which I'm sure real estate was able to create for you. But you bought this triplex. A lot of people read Rich Dad Poor Dad, Matt, and they don't buy a triplex. So what made you actually take that action that so many people don't do?
Well, because I looked at the numbers of what my job was providing me and my 401k and realizing, okay, I have to work until this point to be able to have this amount of income. And what, with inflation, how much is that money actually going to be worth by the time I'm 60, 65? And then I realized I couldn't count on Social Security. Like, I don't even know if that's going to be around by the time I'm that age. So I realized I have to take my retirement, my life into my own control because nobody else is going to do it for me. And even though it was scary to jump into the first deal, didn't know what I was doing, didn't know what was going to happen from it, I knew I had to do something. I had to take action and looked at some various properties, picked out what I thought would be the best fit for what I wanted, and just jumped right in and pulled the trigger.
Yeah, I love it. I love it. Were you married at the time? I know you're married now.
No, I was single at the time, but then actually, no, I was dating my wife. Yeah, for a then girlfriend for like a year, and so she kind of toured places with me.
Okay, so she was on board with, hey, let's live next to our tenant.
Mm-hmm. Yep,
that's awesome. So you don't regret. It doesn't sound like any regrets here because that really launched your career.
Yeah, exactly. That sharpened my teeth, to really just jump in and experience firsthand what it was like to own property and to manage property and to oversee tenants. Because even though I'm not overseeing the residents now at the properties, I know what it takes to do a good job at least. So I can oversee when I'm looking at what the property manager is doing. I can recognize if they're doing a good job or not.
Yeah, that's a good point. I had a bunch of properties out in Memphis, Tennessee, and I got to tell you, man, I had the harder time managing those managers, and I've had multiple out there than my own properties that I own here in town. But I wouldn't have known that if I didn't actually manage my own properties first. So I think that's fantastic advice. But now you're like, I want it more passive. So you're like ultra focused on creating passive income for you and for clients and for your friends and all of that. So you got into the syndication business. Why don't you just start by telling us what is that?
So essentially, the easiest thing is it's multiple people pooling their money and resources and knowledge together to take down a bigger property than any of them perhaps could on their own. And what makes it a syndication is that some of the people are active, where they're finding the deal, managing it, overseeing the property manager, making sure the business plan is being executed appropriately. And then there's other people in the deal that are only passive, who don't do any work whatsoever. And because of that, it becomes a security, and it's guided under the SEC. There's more regulations than if you were just to own a property outright yourself. And so the people I work with, we're very keen on making sure we're on the up and up with following those rules and regulations. There's plenty of money to be made, and it's fine to, even though the regulations are kind of a hassle at times, it's far better just to follow the rules and laws, and it's because really they're built in our favor, like with tax benefits of real estate ownership, and it's a beautiful thing.
Yeah. So the syndication, you bring in private investors, and you and your team will go out and locate the property, acquire the property, manage it, disposition, you handle all of that.
Mhm.
So you're passive investors. That's truly is passive. I joke sometimes, like I'll be in a class or whatever, Matt, and I'll say, okay, so who loves passive income? Right? Who's got rental properties? Okay, leave your hand up if it's passive. Never does someone leave their hand in the air. So your triplex, fantastic investment. You probably got fabulous returns, but that isn't passive.
No, not at all. Very active.
Yep, passive is check, deposit, check, and that's it. So when you do your syndications, your passive investors, they're actually owners in the syndication or in the project, correct?
Correct. They are equity owners and they get all the tax benefits from that equity ownership, but none of the hassles of those 3M phone calls about homeless people, living there or things like that.
So tell us about the last deal you did. How'd you structure it? What is it? Walk us through.
Yeah. So let's see. It was a 94 unit deal in Columbus, Ohio, that I was helping to raise some capital for. It was a townhouse community, and 2009 build, so pretty new, and so it just needed some light renovations essentially. So it's more of a turnkey for the most part, whereas normally in the past I had focused more on value add, where you come, you renovate the units, you make them worth more, and then you can charge more on rent, that sort of thing. But this was more in preparation of, if we do have a recession coming, I don't know, or if we are in a recession, or if we had a recession, I don't know. But when times are challenging, you want better quality properties from the get-go that are cash flowing, and so it's a little more cash flow heavy. And so we raised some capital. It was about a $9 million raise on this one, and yeah, I expect it to do very well. It's Columbus is a great market, and it's an A-class property. Just barely A-class, but A-class nonetheless. And I think if we are heading to a recession, A-class is a great type of product that you want to have.
So it's fully stable, meaning it's mostly occupied.
Yep, correct.
And then your management team manages probably a property manager that's managing the property itself.
Exactly. The people that that I'm working with that are put this on, like, we're all local to Minnesota, and so we have a local property management company that oversees it. But then we have an asset manager, part of the group, that will go in and have regular phone calls each week with the property manager to make sure that they're following the business plan appropriately, that the renovations, or like the light renovations, are getting done appropriately, and the business plan is in place. And then the asset manager will also fly out there on a regular basis to see in person that everything is going the way that it's supposed to be. And so it works well that way, essentially. So you don't, none of the owners are there on site, but we don't have to be.
The Real Estate Educators podcast is brought to you by Pine Financial Group. Pine Financial Group is a private lender specializing in value-add bridge lending for real estate investors. This is accomplished by raising private money from individual investors and lending that money out in short-term real estate loans. Pine operates one of the coolest public mortgage funds on the market because it brings consistency and security to your investment portfolio without giving up on returns. The fund pays its investors a flat 8% return with monthly distributions. There is a low minimum investment and no lockup period. That's right, you can request all of your money back at any time without any fees. Diversify your portfolio out of Wall Street and into Main Street with the Pine Financial Group Public Fund, PFG Fund 5. Find out more at pinefinancialgroup.com. That's pinefinancialgroup.com. Okay. And then the passive investor participates in the appreciation of the property, the tax benefits, which you alluded to. That's going to be the depreciation that you can write off on your taxes. The tenant's paying off the loan. I'm assuming there's some debt in place.
Mm-hmm.
So all the benefits, and the cash flow, of course, all the benefits that you would get of owning your triplex, you would get in this type of scenario, minus probably some fees to whoever's managing the money for you, right?
Exactly. I mean, and they're really nominal fees. The primary way for the active partners to make money is by making sure that the property is profitable for the passive investors. So while there are just some basic fees to cover the costs of running the place, like the cost for the flights out to go there and whatnot, but and over there than that, the passive investors get paid first, and then the active partners get paid once the passive investors are starting to be made whole from their investment.
Are you seeing any shifts in the market with syndications of this type because of the banks tightening up?
I think it's only starting to soften up a bit, and I expect over the next year that's going to happen much more, because there's a lot of people who got bridge loans or variable rate loans that maybe they locked in a rate, but that rate cap is expiring over this year, where it just expired. And so there are syndication companies that are having to do a few different things. They're either going to have a fire sale, just like, oh, we got caught with our pants down, we have to sell it right now for a loss, or they're going to re-up their loan to be able to refinance it, but with greater interest rates than what they originally planned. Because if you think a year and a half ago what the interest rates are, and if you bought something then, you're like, oh, I'm going to refi at 3%, and that's no longer possible to do.
Right.
And so they're either have to eat that, or they're going to have to do some recapitalization where they have to put in some more of their own money, or do a capital call to have the passive investors put more money into it, or take some third-party money from somebody else to come in and to kind of save the deal.
So I guess that's one risk from the private investor's perspective. If the interest rates are going up and you can't get that refinance done, there might be there's a chance that you're going to have to put in some more money to keep everybody safe. Sounds like.
Yeah, exactly. And that's not for every single deal, but I would say over the past few years, there's been a lot of syndicators that have been really far too aggressive with their underwriting and the prices that they've been paying. And those are the people that are really in trouble now. Whereas the people who, like, such as the people I work with, we're more conservative with our underwriting. We stress test what we're doing to make sure, like, okay, if things go wrong in the future, if we have another recession, is the property at this price point, is it still going to be able to ride through those problems to the other side? Then okay, yes. But if the sellers want too much money for it and it doesn't make sense, we just walk away. No need to even look deeper into those kind of deals. We only do things that are going to make sense. But like I said, there's a lot of syndicators who just buy and too high, and everything has to go right for their deal to make money. And right now, that's not happening. So yeah, it's there's a lot of money on the sidelines right now, ready to come in to grab these deals that are really going to flounder over the next year or so.
Are you finding it tougher to raise money with just the fear in the market? I mean, you have these giant banks going down, you have bank runs, flight to quality, all these things that we're hearing. Are you finding it more challenging for you?
Yes, absolutely. Because of these banks failing and the stock market volatility, there are a lot of investors who have capital, but are really worried about what might happen with the real estate market. Even though I would say when the market is volatile with the stock market and the economy, you want to put your money in real assets like real estate, because that's a secure, as long as it's run appropriately, it's a secure way to store your money, to preserve it for the future. So
yeah, as long as we're not in 2008 again, which I don't believe, but what do you think about that?
Oh, I mean, it's completely different factors now than there were in 2008. So it's really not comparable in my mind. But there are certainly, like I said, some syndicated deals that are going to go wrong. But so you want to make sure. I think that the more important thing, if you're going to invest with a syndication, who's in charge of the deal matters more than the deal itself. If they're an experienced operator, been through the ringer many times, even if it's a mediocre deal, they're going to make it work out. But if it's a newbie or somebody who doesn't know what they're doing, or somebody shady that's in charge, it could be the greatest deal in the world, but they're going to run it to the ground.
Yeah, I couldn't agree more. And I'm invested in 5 different syndications right now, Matt, and 2 of the 5 had capital calls because of the environment. And it sucks, right? It's not fun, but when you have the right people like you're talking about, I'm happy to contribute my portion because I know the project is being managed correctly. So totally agree with you there. You're investing in the manager, not necessarily the deal. But look at both, right? I'm not telling someone to just go be crazy. I mean, you definitely want to underwrite the deal on your own as well. So interesting. You're finding it a little bit challenging to raise money. Are they looking for higher rates, or are they just on the sideline? What's the feedback you're getting?
From investors,
Yes.
or yeah, they just want to wait and see what happens for the most part. So, and
Yeah.
yeah, in my mind, when you know, when the market, when other people are waiting and seeing, that's actually a really good time to buy. So there's still great deals out there. And there's going to be more deals in the near future as well. But really, with real estate, it has ups and downs, but over time, if you look at the trends, it's going up and up and up, and I'm preaching to the choir with you, I know, but as long as you buy it, you can buy at any time point in the market cycle. And if you buy it right and you operate it correctly, and you can ride through any difficult times to the other side where it still cash flows at least a little bit, or at least breaks even, you're going to be able to land it to make money when the market comes back up again.
Yeah, I love what I'm hearing. So you're more positive with what's going on right now because you're looking at it as potential opportunities for your group.
Yeah, exactly. We're not flipping properties. The idea is to hold these for longer periods of time and, enjoy the cash flow and the appreciation. And we have flexibility when we sell. So we don't have like okay, we're going to sell this in 2 years, no matter what's going on in the market. No, if we're going to hold on to it for 5+ years, but 5 years from now, the market is down, we're just going to hold on to it for a little longer until it comes back up. Not a big deal.
Yeah. Yeah. What are you doing with your personal cash right now? Are you investing in these?
Yeah, investing. I still have some on the sidelines but investing at the same time.
Okay, cool. Well, we're kind of running short on time, and I definitely want to get to your experience helping other people and reach their goals. So I know you have a podcast. You've been helping Todd with his podcast. You wrote a book. We should probably talk about all of those. So where do we start?
All right, well, might as well start with the podcast. I, joined a podcast with Todd Dexheimer called Pillars of Wealth Creation. I took over for his other co-host, but I've been doing that since 2019 now. Man, for almost 4 years, yeah. And so we've had almost 600 episodes now. And we talk about all sorts of things, real estate and business mindset type of stuff. I would say it's heavy on syndication, but it's not just about syndication. And so that's a great resource. You can search back through our archive and find pretty much any kind of topic that you can think of. And then I started a new podcast called Passive Real Estate Podcast just a few months ago, which focuses on helping support people who want to passively invest into real estate. So I talk with other passive investors about their experiences and insight, as well as active syndicators who raise money from passive investors. So to learn about different ways of investing passively and how, what to expect from a good syndication sponsor.
Yeah, and you had me on about our mortgage fund, so appreciate that. It was fun hanging out with you, and we're kind of starting our podcast at the same time. So this is great. Watch each other's journey and growth. So this has been fun. So where do we find? I guess we'll just leave in the show notes, right? Links to both of these podcasts. I know you and Todd do a fantastic job on that one. So be sure to check out both of those podcasts, Pillars of Wealth and the Passive Real Estate Podcast. And then your book, that you had such an interesting idea when you published this book. So tell us what the idea was and what the book is.
Yeah, well, essentially, it's the book that I wish existed when I started learning about real estate. So it's a book about other real estate books. What I did was I looked at the whole spectrum of real estate investing and found what I thought to be the best book that covered each topic. And I summarized it, condensed it, pushed it, got just down to the meat and potatoes of each book, down to a chapter worth of material. Sometimes books can be sort of repetitive and whatnot, but I took all the best material, put it into a chapter. And then, so by reading my book, you essentially read 20+ books about real estate, and it's called Book About Real Estate. The title was open, so I took it, and so I wrote the book about real estate.
I love it. Dude. That's so funny. Whenever I tell people that, or you and I will hang out and I'll joke about it, but you literally wrote the book about real estate.
Yes.
Yeah, that's great. So it's sort of a syndication, right? You syndicated a book.
Yep, exactly. And I consulted with a property rights attorney to make sure I was following all the laws with that and everything. But yeah, so you can find that on Amazon, Barnes and Noble, Google Play, iTunes, all that kind of stuff.
Yeah, that's fantastic. All right, so you got a podcast. two now. You got a book. So how have these ways of giving education, giving back to the real estate investment community helped you and your business?
Well, no, let me add one more thing that I'm doing. I also run
Oh, yeah.
a meetup. So kind of a
I didn't
happy
know
hour, happy hour networking meetup, which is great because we just, show up at some different breweries and bars and stuff and just talk real estate and kind of learn from each other and, meet potential partners or potential investors and learn about deals that are going on.
I saw that on Facebook. I didn't realize that you put that together. That's really
Yes.
cool.
Yep.
Okay.
Yeah.
So how long have you been doing that?
Oh, well, I started in 2020, I suppose, which a great time to start a meetup. But so
You were meeting at breweries in 2020.
no, it was virtual for a while, which is okay, but it doesn't replace being in person to shake people's hand and look them in the eye. So it's nice that we're able to have it in person now. But so all these different things that I'm doing together, the idea is to add value to the community. Because I would say the most people who are in real estate now, and myself included, didn't start off in real estate. We started with doing something completely different, but then came to it. And there's just, it's not the old boys club anymore. Anybody can come and do it and learn about it. And there's just a lot more material and support than there ever was in the past. And so I want to add to that essentially to help people become the best versions of themselves with real estate investing to reach their financial goals. Because I mean, real estate, it's a great medium to be able to get whatever you want to accomplish financially. And so the different thing, the book, the podcasts, the meetup group, it's all meant to create a community of education, of development, of support with one another.
Yeah, and you are doing that. So this meetup, that's how you really build a community when you get together in person. So man, I love that you're doing that. Where do we find that? When do you meet? Where do we find it?
Well, you can go on. The one I run right now is Multifamily Mastermind, and you can find that on Meetup. But I'm about to move from Minneapolis to Madison, Wisconsin, so I'm going to start a new meetup there. Same kind of deal because there's really not anything like that in Madison, Wisconsin right now.
Yeah. Okay. And we do. I mean, we're open to doing some business up in Madison. So you let me know when that move's complete. Am I going to see you in February when we come out there? This is your last one, or are you going to be gone by then?
Well, I'm moving in June, like just in 2 weeks from when we're recording this podcast, like 2-3 weeks. Yeah.
So by the time this thing is released, you're going to already be in Madison.
Yep, exactly. So I haven't decided on a name of my new meetup group yet, but
once you set that up, let me know, and we'll make sure we add that when we put the podcast out.
Okay, sounds good.
See if we can get people to show up. How is that meetup going? So it's just get together, have a few drinks at a brewery, and talk real estate. There's no speakers or anything like that.
No, when I was doing it virtually, then we would have a speaker each time, and you were one of the speakers at one of the times, and then we'd have some networking after that. But I would say when it comes to any sort of group, like whether it's a conference or meetup or presentation or whatever, the best part of that is not the information that you learn from the presentation or the speech. It's the networking afterwards. And so I just wanted to have the best part of these groups. And that's all it is. It's just networking, meeting other people, potential business partners, potential investors, learning tips and tricks that firsthand, much more so than going to, a speech. Even if the speech is great, the networking afterwards is better. And I remember the first time I met you, you talked about the meeting after the meeting was really where the deals get done. What if there's a real estate meeting, that's great, but there's going to be a meeting afterwards. It's sort of an informal thing. That's where you want to be because that's where the real networking happens. And if there's another meeting after that at a bar or something, that's actually where you want to be because like each consecutive meeting, gets smaller and a tighter knit group.
Yeah, and then you really get to know the people there as that group shrinks down, right?
Yep.
And it's that relationship that you create that creates the business, I think.
Yep, exactly. So that's the idea of the meetup, just the best part of these groups.
Hey, there you go. All right, man. Is there anything else you want to share with us before we let you go?
No, I mean, if people email me, matt@hawkwingcapital.com, I'm happy to give you a free digital copy of my book.
Oh, that's awesome. So free book. Cool, man. Well, I really appreciate you coming on. I'm really excited for your new podcast. I'm excited for your new meetup group, your move. I'm going to miss you when we come out there. Maybe you could still come out and meet. It's not that far, right? But hopefully we see you again, and we'll have to catch up and talk about your trip, man, because I love Europe. I love Germany. I know that's where you were. So when we get some time, let's catch up.
All right. Sounds great.
All right, man. Thanks. Hey guys, I hope you enjoyed this episode as much as I did. If you did, please be sure to follow and leave us a review. Oh yeah, and tell a friend.